Every candle tells a story. But if you don't know the language the market speaks, you'll always be reacting instead of understanding. Today, I'll teach you how to read market structure like a professional, the exact way I break down trends, transitions, and traps so that you can finally stop guessing and start reading, whether you're new or just struggling to stay consistent. I'm Kojak's Pro. Now let's dive right in. Let's build the conceptual foundation here. Market structure is not about lines and labels. It's about storytelling through movement. Every impulse and pullback is a sentence the market writes. The highs and lows, they are just punctuation marks that reveal who is in control, buyers or sellers. For example, taking a look at this chart, this was Euro USD and its movement over time. Now you can see clearly that the market was moving downward. So this market particularly has a characteristic that is attached to it, given that it's a downtrend. So in this case, we are having lower low and a lower high, a lower low and a lower high, a lower low, a lower high. It goes like that all the way down. Now, these various dips in the market reveal, just like I said earlier, who is in control of this market. So in this case, it shows clearly that sellers are in control, right, about such. And you take this out, you see clearly that the market is moving southwards. This is price movement over time. And structure helps traders define buyers and timing. With it, you will stop memorizing and start interpreting. Now, let's simplify this further. What are the building blocks of market structure? At its core, structure is built on 4 basic patterns. Higher highs, like you can see, higher highs, higher lows, like you can see here, lower highs. These are the lower highs and the lower lows. But the secret is not spotting them, it's understanding what they mean. When you see the market making higher highs and higher lows, it simply means that we are in an uptrend, like you can see. So this is an uptrend where the market is making the characteristic movements of an uptrend. Now, if you've begun to see that the market is now making lower highs and lower lows, it just then means that this market is now a downtrend. Now, to drive this home further, take a look at this chart. So this is the Euro USD chart I was showing you earlier on, and we clearly marked out the direction of price, that price is heading to the downside. Now, how do we know for sure? What does market structure say in terms of its elements? Now, we can see here that the market is making lower highs and a lower low, lower highs, lower low, like so. It continued to do that until it got to this point. So as at this point, the market was clear-cut in a downtrend, and market structure says that. Now, this is the case for a bullish scenario. So in this case, the market, as at this point right about here, the market began to move to the upside, and we'll know this as traders by seeing what structure is telling us. So markets began to make higher highs in this case and higher lows, higher highs and higher lows, higher high, higher low, like so, up until it got here. So as at this point, the market was clear-cut in a bullish trend. Now, there are scenarios whereby the market isn't making either higher highs or higher lows. So the market ceases to be in a bullish trend and is neither in a bearish trend. In this kind of instances, we will say that the market is ranging. And what the market does simply in this case is just moving sideways. It's neither making a higher high, a higher low, or a lower high or a lower low. Like in this case right about here, you can see that the market was initially in a downtrend and the market came down all the way here to this downtrend, like so. Now, as at this point, you can see clearly that a range was marked out right about here. Now, this is the range that was marked out, and this range simply meant that the market was neither making higher highs or higher lows, or lower highs or lower lows. And you can see clearly with our simulation here that the market just began to move sideways, neither making higher highs or higher lows, just moving from one point to the next. So this is what a range looks like when the market is not making sense in terms of its structure or price movement. And if the market is moving sideways in this fashion, we say that the market is either consolidating or ranging. As a pro trader, your job is not to predict the next move. It's to read what structure is already saying. Now, Let's see where traders get trapped when reading market structure. The transition from uptrend to downtrend is where most traders lose money. The market shifts character quietly. One break of structure, one liquidity grab, one lower high that no one notices. For example, in this case of AUD/USD, we can see clearly that the market was all the way going down to the downside. So the market was in a downtrend, and then it made its characteristic movements of a bearish market like I just explained earlier. So it was making lower lows, lower highs, lower lows, lower highs, and it continued in that fashion, lower lows and lower highs up until this point. So this was the previous lower low it made, and it made an equal low and broke structure right about here. So in this case, clearly this point was structure. The market broke structure right about there and failed to go lower. Now, most traders don't understand that, as at this point, the selling is in jeopardy. You cannot keep selling when the market is already showing you hints from structure that the trend is likely to change. So in this case now, it broke structure. After breaking structure right about here, it came to make a higher low. So this point right about here, as at this point, the market made a higher low. So it's higher than this one. So the market made a higher low right about here. So if you used to selling, you will be given to the false notion that, oh, the market just went to go and weed out some traders and has broken down back below. Now, precise entries is usually a product of understanding to its maximum market structure and price action. Yes, the market did break below here, but what separates pro traders from amateurs is the patience to wait to see whether the market does sustain below this level. Now, in this case, when it did break below here, it's just simply going to point out here that we did have a ranging market here, and there was a break above this range, giving us a break above the neckline. So in this case, this was a chart pattern. Now we broke above the range, came back below it, and we've got a bullish engulfing current back into this zone. Like I told you, you don't trade on the breaks. That's the first tip. And you only wait for a retest. Now, did we see a retest right about here? So we look at this chart, we can see now we clearly broke back above this neckline to show that that was actually, in hindsight, a legit lower low. Now, if we have our entries somewhere around here, we can see that, so after a break above this level, let's say you decide to take a trading position from that point to this point right about here, which is the next structural point. And let's see whether the market goes in our favor in this case. You can see that the market did clearly hit this zone to show that the trend actually respected structure. So the first cue is to understand that structure has been broken or a change of character has taken place. As a trader, your first job is to see that on the chart and take note of it. Do not jump on the breaks, because that's the mistakes most traders make. They jump on the breaks instead of waiting for a confirmation. So in this case, a retest. Wait for the retest, scale down to your lower time frames where entries are the best places to be taken, and take entries with smaller stops and higher rewards. Think of structure shifts like turning a ship. It doesn't happen instantly, but if you're paying attention, you will see the rudder before the vessel changes course. Now, you are a retail trader. We are all retail traders. But it pays to see the market in light of the way the big boys, which are the institutions, see them. Institutions see structure differently. They use liquidity pools and imbalances to engineer structure. What you call a breakout, they call distribution. And that's where you find terminologies like liquidity breakouts, liquidity sweeps, stop loss hunt, and all of those kind of models. This is because retail traders chase the move, but institutions build the move. They control the move, and they can subject you and I to market manipulations. Now, I've created a video about market manipulations. If you want to watch a video about the market manipulations, watch it right here. Now, let me show you how to read momentum and intent as a trader. So in a nutshell, let's talk about the flow framework. Once you understand structure, the next step is flow. Flow is the reading between impulse and correction. It tells you whether structure is healthy or weakening. Let's take a look at CAD/JPY in order to understand this flow better. Now, CAD/JPY started to make lower highs and lower lows right about here. So in a nutshell, CAD/JPY became bearish at this point. Now, I'm just going to draw them out so that you can see what I mean exactly. Now, you can see that each time we make a lower low, we have a lot of candles that try to show exactly that. So we see a lot of red candles before the pullback. Now in this case as well, we see quite a lot of red candles as well before the pullback. The same goes for this case right about here. We see quite a lot of red candles as well before the pullback. Now watch what happened right about here. So I'm just going to zoom it. Watch what happens right about here. We are seeing fewer candles. If you check right about this region, we are seeing fewer candles with lesser momentum to the downside than it was in this previous area. So in this previous area, I'll just use this. So we saw better candles here, more candles, more red candles, more red candles, but we are starting to see fewer red candles here and a fewer red candle here. So as at this point, this is how you know for sure that the momentum is beginning to slow down. Now, watch what happens right about here. We are seeing very thick rejection right about this zone. So buyers are about stepping in this zone. Now, watch what happens next. A momentum bound bullish candle. And at this point, you can see clearly that it's broken structure right about here. So this just shows that the trend was weakening over time. You can apply this concept to different currency pairs and financial commodities or assets, and you will see exactly what I'm telling you. And to drive this further, we also have a neckline right about here. So this neckline was here. Watch what happens after there was a break of structure and a break of the trend line. The market went all the way to the upside, like you can see right about there. Here's a checklist when reading structure using flow reading. Is momentum aligned with structure? Are pullbacks getting deeper? Is volume confirming the direction? Here is a mini exercise for you. Pause the video, like right about now. Open your favorite pair and map the last 3 structural shifts. Ask yourself, when did flow begin to slow down? Now, let me give you a practical repetition framework to train your eye to see structure in real time. Seeing structure in hindsight is easy. Seeing it live is what separates amateurs from pros. Here's the training routine. 1. Replay charts daily for 15 minutes. You can use charting tools like TradingView that will help you to do this effectively. There are other charting softwares out there. This is not a video for charting softwares, but for simplicity and for easy access, you can get started as soon as possible with TradingView. Just head over to TradingView, grab an account, a free account, and start to use the software to simplify your trades. 2. Label lower highs, lower lows, higher highs, and higher lows as structure evolves. 3. Journal what you expected and what actually happened. 4. Build your own pattern library of transitions. When doing this, don't just memorize setups. Train your eye to recognize behavior. Market structure is not a strategy, it's a language. And once you read it, every setup, every entry, every chart becomes clearer. If you found this helpful, I've built a free Forex masterclass that dives deeper into this, from structure to psychology to execution. The link's below. Stay consistent, stay curious, and I'll see you in my next video.